It pays dividends to learn from the world's best investors. Warren Buffett, he shared his investing wisdom over many years. In 2025, he's 94 years old. More than 10 years ago, I had the great opportunity to attend the annual shareholders conference that was in Omaha, and it was really impressive to watch him and Charlie Munger, rest in peace. They answered questions for hours on end. However, these great investors, their actions speak louder than words. Berkshire Hathaway's cash pile, it's hit new highs. This includes short-term investments as well. There isn't as much cash drag as past years, with short-term rates around 4%. That'd be roughly $13 billion in interest for Berkshire in 2025. But of course, Buffett would much rather be investing this cash, or the bulk of it at least, in great businesses at discounted prices. But here lies the problem, and it's twofold. Up first, stocks are expensive. Stocks are near all-time highs, and high prices alone aren't always bad. Sometimes you can get more value out of a $150 pair of shoes rather than buying 3 pairs for $50 each. But based on many valuation metrics, stocks, they look like a worse deal today. For example, the S&P 500 PE ratio, it has some predictive power over future returns. Coming in at 30 today, average annual returns might be closer to 2 or 3% over the next 10 years. There's plenty of dispersion. You might see higher returns or maybe even negative returns. But either way, it is good to keep these long-term averages in mind. For a better breakdown, I'm going to link to an article, and you'll also see a second chart in that segments the data before and after the year 2000. Either way, this helps explain why Warren Buffett, he's piling up cash. He's struggling to find better deals to invest in. The opportunity cost is higher with interest rates being a little higher as well. Now, the second big reason that we've seen this pile up, he's more limited with where he can invest. As Berkshire Hathaway has grown, its size has become a limiting factor. To move the needle, it's limited to a shorter list of companies. Investing in a $10 billion or even a $50 billion business, publicly traded company, it's not really going to have a big impact. In accounting speak, it's not as material. Warren Buffett, he's now fishing in a smaller pond. The fish are a lot bigger in that pond, but they are some of the most watched in the world, and it is harder to find big discounts. So with this in mind, this really cool data which just came out, I've updated my charts. It's just a good reminder to follow Warren Buffett's lead in 2025 and the years ahead. Patience, it's a virtue, and Buffett, he has that in spades. His steadfast approach has helped him become one of the world's best investors. He's built up huge piles of cash and short-term investments many times. Then in past downturns, he's been able to swoop in when great deals come along. And in some cases, he's been a backstop or a lender of last resort. The good old Warren Buffett saying, be fearful when others are greedy, and greedy when others are fearful. I was expecting Berkshire to invest more of its cash during the pandemic. We saw the start of a big downturn. However, governments around the world, they stepped in with really unprecedented stimulus. They sent checks directly to consumers, and they also pushed interest rates back down to artificially low levels. This really helped prop up the economy and push stocks to new highs. We've seen a similar trend with housing and many other asset classes. It has been a good run for past investors, but after this run-up, we are seeing things start to crack or the tides change. The Fed, it's been keeping rates higher for longer to combat inflation, which was largely self-inflicted. Layoffs and unemployment are picking up in some industries, and this really doesn't bode well for the economy. Nonetheless, it's a fool's errand to try and predict where stocks are going to be in the next month or even the next few years. It's just better to play the long game and keep these trends in mind. Outside of some changes to optimize around taxes, I recently shared an article on my own Roth IRA. So outside of some more tax-motivated moves, I'm largely holding tight with my portfolios. And similar to Buffett, I have some cash on the sidelines. Not nearly as much, of course. And I'm earning 4.5%. It's not locked up and I can move it at any time. But either way, similar to Buffett, I'm hoping there's going to be some better investment opportunities soon. I've started sharing a weekly article on Substack. I'm going to leave a link to that if you want to get those updates as well. But I will share more investing topics on my YouTube channel here, but also more adventure-related content with having lived out of my Tesla. So thanks for sticking with me this long. And if you're new, I always appreciate new subscribers. Please let me know if you have any comments, questions, or any interesting research to add to what I've shared today.